All right. Good evening, good evening, good evening to everybody. This is June Collier, and what I'm going to be doing in this video is I'm going to be talking about the stock market, and I'm going to talk in particular about why I own Nike. And one of the things that I've been wanting to do, and we're going to start doing, is I'm going to start teaching a lot of different financial concepts. And today I'm not really teaching you a concept. I'm just really kind of showing you what it is that I actually do. And then over, the next several weeks and months, I'll kind of break it down and kind of show you bit by bit what you should probably be looking at if you're interested in getting into trading. So the first thing that I do is here's what I'm gonna do. I'm gonna share my screen with you, and then I'm gonna show you exactly what I do when I start investing and trading. So the first thing that I do is I go over here to Yahoo, and let me show you what I do every day, Monday through Friday. One of the things that I do is I log into Yahoo and I go here to Yahoo Finance. So you can find that at finance.yahoo.com, whatever you want. And one of the things that I do is I've got listed like my watch list, some of the stocks that I'm just kind of tracking and keeping my eyes on. But what I want to do is I want to talk to you a little bit about Nike. So I'm going to click on Nike. The ticker symbol is NKE. And the market as a whole was down today. Nike happened to close up barely, but it did close up. But the market as a whole was down. And so what I want to do is I want to share with you a few of the things that I look at when I'm analyzing a stock. And some of the things that I want to talk about may not necessarily, you may not necessarily understand at this point, but as I go on over the next couple of weeks, hopefully you'll get that. So we're looking at a snapshot or a summary view of Nike. It shows me that Nike closed today at $96.10. It shows me that it was up 0.5% today. So closed at 4 p.m. And then it shows me the previous close. It closed yesterday at 95.56. So it's up, about 50, 60 cents today. It opened this morning at 94.81, and then it just kind of gives you the days range and the 52-week range. Now, one of the signals that I like to look at is I like to look at stocks that are trading at or near the 52-week high. So the 52-week range right here is $96.46. That was achieved today, $96.46, and we closed out at 96.10. So this stock is trading at or close to the 52-week all-time high. Just one of the things that I like to look at. The other thing that I really like to look at is dividend. Now, the Nike is part of the Dow or the Dow Jones Industrial Average. I love the Dow. These are the big 30 companies. There's 30 big Dow components that are out there. If you've never heard of the Dow, don't worry about it. We'll talk about it a little bit later on. But the dividend yield here is 0.93%. So that means if the stock goes nowhere, you're going to earn 0.93%. The dividend for Nike isn't as sexy and exciting as some of the other Dow components that I trade, but it is what it is. So it's going to pay out, Nike is going to pay out 88 cents for the year, and that's going to be broken up per quarter. So you're going to make about 22 cents per share that you earn per quarter. And then this ex-dividend date, this just says that you have to own the stock by this date in order to get paid the dividend. That's all that particularly means. Price earnings ratio, earnings per share. I'll cover that in another lesson, but this is what I'm just looking at a quick glance here. The next thing I like to look at is I like to look at the chart itself, and I like to see what the trend is. The trend can be your friend. And so what we're looking at here is what I want to do is I want to look at the 5-year trend. So if I click on 5 years, It shows me that 5 years ago, November 1st, 2014, the stock was trading at $49.65, and today is trading at $96.10. So in 5 years, you would have made 100% return on your money. That's an average of about 20% a year, which is excellent, 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 excellent. So in 5 years, had I been trading back in November of 2014, I would have bought Nike roughly at about $50 a share, bought it at $50 a share, and today it's almost at $100 a share. So I've doubled my money in a 5-year period on this particular stock. I'm also going to look at the 1-year trend just to continue to see if the trend is still trending up. So $74 back on October 15th of 2018. It is now at 96.10. So the stock is continuing to rise. So the trend is your friend. And so what I'm going to do is I'm going to go ahead and click on chart. And the chart's going to give me a bigger view of what's going on with this actual stock. And so as you can see, I can do a 5-year trend. I can look at where the stock is 5 years ago. And this kind of shows me the stock and what it's done. So let's take a look at what this looks like down here. Down here at the bottom, these green and red, this is like volume. We'll talk about that a little bit later, but what's more important here is these little square box here. This is dividends. So back December 11th of 2014, it paid a dividend of 14 cents. Then in February 26, 14 cents. Then May of 2015, the dividend was 14 cents. And we can see that the dividend was 14. Then in 2015 of December, the dividend went up to 16 cents. And then we see a split, a stock split. We'll talk about what that means as well. But there was a stock split in December, actually Christmas Eve of 2015. Then our dividends continued at 16 cents. Then it went to 18 cents in 2016. Then it went to 20 cents. So what you can see is that the dividend is increasing. In 2018, it was still 20 cents. And then in November of 2018, it went to 22 cents. And that's where it is today. So when we look at the dividend of 88 cents, that's paid out on a quarterly basis. And you can actually see that here from this chart. And so this is a really, so far, the stock is a stock that I'm really liking because the trend is the dividends are increasing and the price of the stock is actually increasing. Now, here's something else that I've learned and just from other investors. When a Dow component or a stock like this gets close to $100, the institutional investors are going to push it to 100. So I started trading this stock probably earlier this year, and around about 80, 70 bucks when I started trading this stock, and I saw that it was getting close to $100, and I knew that this was a stock that I wanted to own. So I've got about 400 shares of Nike right now, and I truly believe that Nike will hit the 100 mark and probably go way past that. Right now we're at $96.10. So I believe personally that this is a stock that's definitely going to go to 100 and beyond. So that's all good news. I mean, we're only a couple percentage points away from $100 anyway. So that's something that I'm always looking at. Again, just looking at the charts, I like to look at the 5-year chart to see the trend. I like to look at the 2-year chart to see if there's still an upward, 1-year chart to see if there's still an upper trend. And then if I'm really looking at, just a short time period, I might even look at a 6-month chart. But when you get into a shorter time period, it's very, very difficult to make that type of determination. All right. So now let's take a look at some of the other things that are important. And one of the things that I think is important is the financials. How is the company doing financially? There's something called top line revenue growth and bottom line revenue growth. And when we look at top line revenue growth, that's basically the sales volume. How much sales did they get that came through? And what I like to look at is I like to look at the last 3 years of top line revenue growth. And I like to see that top line revenue growth increase year over year. So Yahoo provides the last 4 years, which is great. I like to look at the last 3, but Yahoo provides the last 4. You'll see that in 2016, Nike did $32 billion. Okay, this is in billions, by the way. Okay, it's not 32 million; it's $32 billion. In 2017, they did $34 billion. In 2018, they did $36 billion. And in 2019, they did $39 billion. So you can see that top line revenue growth is growing year over year, okay? And this is top line to date, 12-month total revenue growth. I believe that's what TTM is, okay? It's the 12-month, what they've done in the last 12 months. But the top line revenue growth is growing. So that's a plus. That means that they're making sales, and their sales that they're making is getting bigger and bigger over year over year. And that's going to make the stock price increase. If you got great sales year over year, that's going to be another indicator that the stock price is going to increase. Now, I love to look at the annual, but also when you're getting in and starting to trade, you got to look quarterly as well and see if that's matching and doing the same thing. So right now we're looking at annual. I'm going to click on quarterly. Now it's going to show us the quarterly revenue growth. And what you're going to see on a quarterly basis is that it may not necessarily grow. It may not increase quarter after quarter, but you just want to make sure that it's stable, right? And so we see that in the last 4 quarters, we've gone from 9 billion, 9 billion 6, 10 billion, 10 billion 6. So even quarterly, the top line revenue growth has grown quarterly. It doesn't have to do that. And in many cases, most stocks it won't, but you just want to make sure that it's not drastically different. And so I can show you an example of a stock that is drastically different, but we like that, okay? So I'm gonna go back to the annual. The other thing that we want to look at, that was top line revenue growth. Top line revenue growth is money that's coming in, but what's also important is the bottom line revenue growth. That's what's left after everything is paid. That's almost like cash flow. What's the cash flow that's left over? And so what we're going to do is we're going to go down here and we're looking at net income, right? So after you paid all of your expenses, what's the result? So we see 3.7 billion, 4.2 billion, then it drops to 1.9 billion. Big concern here, right? And then it goes back to 4 billion, and then over the last 12 months is 4.3 billion. So we see this increased growth. Why did it drop in 2018? That was my question. So I wanted to go back and see what was going on. What was the operating expense in 2018 that made this thing drop? And what I noticed is I looked at the income tax expense. Income tax expense was huge in 2018. So, you want to just kind of keep your eye on those type of things. That's something that is important for you to take a look at. So we've looked at the financials. The next thing I like to look at is I like to look at the analysis. So I'm going to click on the analysis. This is, what the experts say. There's 25 analysts who analyze Nike. And so a couple things that I want to kind of point out, right? Here's what they estimate that the revenue will be. So the average estimate for 2019 of November 2019 is that Nike's going to do 10 billion. Okay. Low estimate is 9.99 billion as far as revenue. Okay. Then it says in 2020 it's going to be 10.3. Then it says current year 2020 42, and these are quarters. Okay. So this is the quarter. 10 billion, 10 billion point 3 is saying in 2020, the full year, they're expecting Nike to do 42 billion. And then in 2021, they're expecting Nike to do 45.6 billion. So the analysts are expecting Nike to continue to grow year over year. Those are all good signs. Now, this is just their opinion, okay? But the analysts say that they're expecting Nike to continue to grow. Now let's take a look at the earnings history. So the history shows us what Nike has done in the past, the history. And so the estimates of, this is called earnings per share, the earnings per share. And these were the earnings that they estimated. This is what the earnings that Nike actually had. So Nike had a difference of 13% growth compared to what they had estimated. In February of 2019, it had a 4% surprise, meaning that it did 4.6% better than the analysts estimated. In May, Nike did 6% less than what the analysts estimated. So I'm gonna write that down. That was May 30th of this year. They did 60% less. We're gonna see what happened with the stock price in May. And then in August, check this out. In August, Nike did 22% better than what the analysts thought. So we'll take a look at August 30th and see what happened to the stock price there as well. So that was 22.9%, okay? So let's go back and take a look at the chart. We'll go back to the chart here. And in May of 2019, May 30th, Nike did 6% less. So let's take a look and see where May 30th was. So we'll go here, find May 30th. And we can see that we can see even before May 30th, we can see that the stock start taking a dive, okay? And when I say a dive, it went from a high of 84 down to a low of 77, right? So we lost about seven points here. But very, very quickly, that stock rebound because the investors saw this, it was a great opportunity. They believed in Nike enough that they thought it was a great opportunity. Now, in August 30th of this year, Nike did 22% better. So let's go find August 30th, which would have been right around here. Nike was selling at 85, let me get 84.50. And we can see that it had already started trending up, but it did 22% better. And look at what happened to the stock. The stock just went from $84 to $96 today. So those analysts, when the stock hits what the analysts think they're going to hit, that makes a big difference. And so that's something that we want to take a look at as well when we're looking at the analysis of the stock. Now, let's take a look at who holds the stock. This is important as well. I'm going to be talking about institutional investors. Institutional investors. So, you know, a lot of people think, man, I'm going to move the market. I'm going to go out and buy 1,000 shares and the market's going to move because I bought 1,000 shares. That you're a blip on the screen. So as an individual investor, we are blips on the screen. Us buying stock does not move the stock one way or the other. It's the institutions that will move the stock. And as I begin to do training, you will understand why institutional investing is something good to pay attention to, because they move large volumes of this stock. And so what we'll look at is 83% of the shares held, Nike shares that are held by institutions, right? 83%. So about 20, maybe 17% is held by, you know, individuals, but 83% is held by institutions. So we got to follow the institutions. The institutions are what move the money. And that's something that's important. And so when we look here and we look at who the institutions are, Vanguard. Well, Vanguard has 105 million shares of Nike. 105 million shares of Nike, okay? BlackRock has 87 million shares. So these are million shares. T. Rowe Price has 24 million shares of Nike. These are the top institutional holders. The top mutual fund holders, Vanguard Mutual Fund has 34 million shares of Nike. Vanguard 500, which is a great, if you got Vanguard, the Vanguard 500 is a great index fund. They own 24 million shares of Nike. And so what you want to do is you want to follow what the institutional investors are going to be doing. I'll be talking about that later in some of my training, but you can see that there's a specific reason why I'm actually going after certain types of stocks. You'll begin to see that as we go through and look at some of these stocks here. Let's see, is there anything else that I want to cover on Nike? There's nothing really that I want to cover on Nike. I'm gonna leave that. I'm not gonna do that. So this is Nike. Nike is definitely a stock that I own. I own about 400 shares of this stock. I actually own 400 shares of the stock. I've got some other shares in what I call options. I own some options on Nike as well. And just a really, really great stock to hold. If you are purchasing stocks, you don't have to necessarily go out and get 400 shares of it. Just depends on the size of your portfolio. But I really do enjoy Nike, and those are some of the reasons why Nike is such a great stock. Now, what I want to do is I want to give you a comparison because the financials are really key. When I look at the top line and bottom line, I want to show you something that's pretty interesting. So if I go to GE, everybody knows GE, General Electric. General Electric used to be in the Dow. They used to be. They got kicked out of the Dow, all right? We see that about 58% of the shares are held by the institutions with GE, okay? And we can see who those holders are. But what I want to do is I want to take a look at the chart first. Let's take a look at the GE chart. And let's take a look at the 5-year chart. And when you look at this chart, just the chart alone tells me not to get into the stock. Like, you got people that are bottom feeding on GE because they think that GE is going to make a rebound. But if you are a trader, you want to follow the trend. GE is not a stock that I want to purchase because it has a downward trend. So GE is they're out of my book. I'm not even going to look at them at this point, right? And then if I look at, the dividends here on GE, I can see that the dividends have gone from 22 cents back in 2016 to 1 cent. So this is the exact opposite of what we saw with Nike, right? The dividends are getting smaller instead of larger. The trend is going down instead of going up, right? So those are some things, but let's go and take a look at some other things. Let's take a look at the financials. Financials are key here. Now, let's take a look at the financials because this is big. So when I look at 2015, they had 115 billion. In 2016, 119 billion. In 2000, no, did I say that right? I think this might be in millions right here. But we can see that the trend is going up in their total revenue. So top line revenue growth for GE is up. So you're like, well, why is the stock down? Here's the reason why the stock is down. If I go down and I look at bottom revenue growth, look at what's going on. Negative, 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 negative. And so they're losing money. They didn't make money. They make money on the top end, but they had so many expenses that they actually had a negative amount. So it doesn't matter how much money you make if you're spending more than what you make, if you're spending more than what you brought in. So that's why you want to look at top revenue, because if I look at top revenue, I'm like, man, this is looking strong because year over year they're growing. But when I look at the bottom line revenue, it looks like a horror story, right? And so these are things that you definitely want to start paying attention to when you're out trading stocks. And so hopefully this is good. Hopefully you're saying, man, I really need to learn more of what June is actually going to be teaching, because this makes a lot of sense to me. So I'm gonna stop sharing my screen here just for a moment. So hopefully you're getting a taste of what it is that I look at when I'm actually trading stocks. I look at, the fundamentals. I look at the trends on the price of the stock. I'm going to look at the dividends that are being paid out. I want to look at the institutional investors, who's holding the stock, because I don't like to lose money. Now, could GE be a great buy? Could GE be a company that's on the rebound, that's going to make a rebound and do well? They could. They could. But they have already proven that they are a bad stock. And so I'm going to wait for GE to prove that they're a good stock before I actually invest my money there. See, I don't like to gamble with my money. And so there are things that you can do, and there are stocks that you can buy that are great stocks that you don't have to gamble on stocks like GE. And so we'll be talking about that. We'll be talking about other stocks that I have, like Visa, Home Depot. These are other stocks that I own, and these are stocks that I'm going to show you why I own these stocks as well. So I hope that you have enjoyed this training, or at least a sneak peek. What I'm going to be doing is I'm going to be talking about finances on this channel. I'm going to be sharing information like what you just saw here today, but I'm going to break it down in bite-sized chunks. I just gave you a grand overview today, but what I'm going to do is I'm going to take one little small step at a time. I may just do a training on the Dow Jones Industrial Average, so you know what that is, so you know what companies are in that. Then I may do another training on the S&P 500, so you know what that is. I'll do a training on dividends, so you understand what that means. I'll do a training on institutional investors, so that you know what that means. So that as we begin to progress along in 2020, and I begin to talk to you about different terminology, you'll be able to better understand. So if you like it, leave a comment below. I want to hear your comments. If you thought this was of value and you want to see more of this and you want to learn more, please leave a comment below. Share the video. Go ahead and share the video. Let people know that, I'm doing these types of trainings. I'm sharing this type of information. Doesn't cost you anything. I thought I want to share, and I think knowledge is powerful. Applied knowledge is even more powerful. So once you have the knowledge and you start applying, your life will definitely change. This is June Collier signing out. God bless, take care, and have a great weekend.